Okay, let's take a look at the indexes and also a couple stock like Apple before the market opened for trading this morning. Right now, I'm basically just going to look at the ETF rather than look at the cash index. Right now, we're looking at the diamond here, the ETF for the Dow 30. As you can see, still making a new 52-week high. And right now, the future also indicating that it might be have a slight positive open. But you could note that it's been 4 consecutive updays, and most of the time, feel here and there that we get 5 consecutive updates, and here we have 6 consecutive updates. So wouldn't be surprised that we see another positive day here, even though with Apple disappointed earning and kind of get a little affected on some of the technology stock, and that might have a little influence on the Dow. So it depends. Anything could happen. So we'll just have to wait and see. But so far, right now, the indication is the Dow is going to be slightly higher on the opening. And if we take a look at the spider, the S&P 500 ETF, you can see that also it had 4 consecutive update, and right now the overnight future is pointing for a slight negative opening, but still it's continued to trend higher and making that 52-week high. So right now it is a little bit overextended, but I think that we still, the upside is still there's still more upside to come. Although we might see a little pullback and possibly come back here and test this 148, 147 level here, this 148 somewhere around here. And then if we look at the Russell 2000, Russell 2000 got a pullback day yesterday. It's kind of pulled back a little bit. It's been a while. It's also got after 3 consecutive update. So been surprised to see a little bit pullback because it's still hitting all-time high and been quite strong, the small cap. And from all these indications, I think that the uptrend is still intact, although we could see some pullback in the near term, but that might be a buying opportunity if that happens. And then the Q, the Nasdaq 100, that's the one that is being depressed by Apple. You can see that the overnight, the after hour, the Q really got tanked, and so we probably see some weakness on the Q, and there are some other tech stock coming out and reporting on earning. And right now, although Apple will have quite a weighting on the Nasdaq 100, but the influence on the market as a whole on Apple, I think as the stock price coming down, it will get a little bit more diminished. Because you got other stock such as Netflix reported earning, that thing pop after hour, and previous day Google got earning and it pop. We're gonna take a look at some of those. So the impact, certainly Apple will have some impact on the Q, but I think to the degree that it have right now compared to the recent past might have diminished a little bit. But although we still probably could see the Q sitting here on this 20 EMA, and we might get a little flush down here to somewhere around below this, somewhere around this 66, 66 and a half area. Definitely, I think the Q will try to catch up with the other index. So once after these earning period kind of winding down, and a lot of the tech company have reported, although there was a lot of question mark in terms of how strong the tech sector is. But once that is out the way, I believe the Q will come back, get up above the 68, and possibly at least get to this 70 level, and try to catch up with all the other indexes, and maybe it too will join the party and hit a new 52-week high above this 70.50 here. So with that all said, let's go and take a look at Apple. Apple here, you can see how it tanked, from the close of 514 yesterday, somewhere around 514, and as soon as earnings come out, it just tanked here. And if we look at what we were talking about before the earning on the previous video that I put out, was talking about the possibility of having this gap fill if it doesn't come up with a good favorable earning, to push it back up to this 535 level, then we probably could see it come down and fill this gap. Well, right now it's kind of been hitting it, more than filling that gap, and the next gap is down here somewhere around this this 444 here. Let's see here, back in the January 2012 time frame here, and that gap is basically is about 420 and 425. Essentially this gap is the 425 level here. So Jeff Gunlock from Double Line, I think he was on CNBC Fast Money I'm talking about, and I think for a while back he was talking about that 425. I believe this is the area that he is looking at. But once we get past that 425 and it can't hold that, we don't get that big flush, chances are we're going to come down and possibly see way down here somewhere around this 315, because that is the let me see, this potential head and shoulder here. If we take a look at this, let's see here. Let me get my cursor here so I could get my pointer here. Remember this little head and shoulder, or this pattern. Okay. Sometime this thing, when you doesn't have the right slope, it just so you could see, right? I mean, this is the baseline here, and if we get a little bit major move here, essentially it will take it down to somewhere around this level here. That's the major move. So if we can't hold this gap, right now this gap is being filled, so I'm not going to see what kind of bounce it is. Maybe we get a little flush, but over time it probably will work itself down to this 425 level here. If we can find support, maybe at this level here to get a little bounce. So if that's the case, then certainly it's going to be more pain to see Apple coming down, and so that's one of the reasons why one should never hold these stock over to earning, because you could never kind of predict what could happen and how dramatic these kind of price drop. Although the option market gives us an indication that was going to be somewhere around that $35 to $40 move, plus or minus, either way. But still, it's a crapshoot if you're trying to trade to those kind of number. And then let's go back and take a look at Google. Google came out earning the day before, and it got a nice pop, and it held the gap fairly well. And we're talking about this coming up. It seems like it's firming up, and the option market was pricing it somewhere around 740, and so it actually hit that number fairly well. And maybe we get a little bit consolidation here, and possibly, like a lot of people was thinking, that the money that coming out of Apple might be moving into Google and possibly to Netflix and all these other guys. And we're talking about possibly getting back up here in this 755, 760 area, and it might even get up to the retest that all-time high that they had back up here at the 774, 775 area. So and the other one that we talked about was IBM, and IBM also had pretty nice earning, and also gapped up. And we're talking about that possibility of getting up here, breaking this resistance, get them up to this level here, 198, and possibly get up to this 200. And we say, if it get up to this channel, and it could get up here to possibly fill this gap here. Well, come up to this 204. It seems to be holding the support here, so we'll see how it going to react this morning. And today's trading, to see could it continue to move up and fill this gap here, and that certainly will help lift the Dow, continue to move the Dow, and you can see the volume is pretty extraordinary yesterday with IBM, that kind of volume coming in. So definitely, although the candle it's like a low shooting star inverted hammer, and on an uptrend that usually signify a little bit of an exhaustion. So we'll see how it's going to play out, and see what they're going to do. And let's just take a quick glimpse at Netflix. Netflix is, that's a heck of a move. It's 30 some odd percent move after the earning. I mean, that's I mean, these kind of moves you could never play, right? I mean, just imagine that you say, oh man, I should have got in on this thing and catch this move. Well, just imagine that if it went the other way, right? I mean, you would have trapped and you're down. If you're holding 100 share of Netflix just for a little modest, trade, I mean, 100 share, and then if you flip that around, I mean, all of a sudden just a swoop, you're down $3,800, right? I mean, these kind of trade, it's just like gambling. You certainly don't want to play that kind of stuff. If you want excitement, go to Vegas or Atlantic City. This is not a game for you to go and toss around money like that and get excitement and be able to tell your friend or whatever, or having a drink to say how smart you are and you nail Netflix or whatever. But definitely when it reverts the other side, probably most of the people probably uh, uh, so embarrassed that they probably wouldn't even say anything. So, but that's the way the game is. You basically have to manage the risk, and that's one of the reasons why I do not hold to earning. And matter of fact, there's a couple of them that I have to get rid of before earning come out today. One is Starbucks. I'm actually holding some Starbucks, so I'm gonna get out of Starbucks before the close of the market today. And we'll see. I mean, if I miss the move, I miss the move. There's no big deal. We'll just go back and reinitiate the trade if it's still going the direction that I'm anticipating. So good luck to everybody on today's trading. It's definitely those people that is holding Apple certainly feeling a lot of pain right now. And hey, you just have to take the lump and move on. Good luck to everybody.